For those of you who don't know me, my name is Agostino. I'm a Chief Commodity Strategist with Farms.com Risk Management. And we help farmers across North America do a better job of marketing. It's not easy, but I'm going to give you a quick marketing cheat sheet today. If there's anything you're going to take away from my presentation, is learn this little trick that I use. It's not easy, it's hard, it's never perfect, but if you use my marketing cheat sheet, you'll do better at marketing, okay? And this title, Will Trump Trade War 2.0 Derail Ag Commodities, Feast or Famine? I came up with that way back before even Trump got into office. I was worried that he was going to get reelected, and then I was worried that he was going to start another trade war. And I felt not to get too political with you, but I felt he could be a better leader than Harris. If those were my two options, I thought Trump could be better. He could stop the wars around the world, make the world more peaceful. He was going to lower taxes, maybe help the economy, pro-growth, deregulation. But be careful what you wish for, the old saying. And I never thought I'd say this, but it's going to be a long 4 years. And we'll get into all that, okay? All right, so the Great Ontario Yield Tour. It's our 10th year. We started this in 2006, and you guys have been doing an amazing job the last 5 years. These were the final yields from Agricor. This is 91% of the insured acres, and this is soybeans, I believe. 53 was the final yield. That ties last year's record at 53. We were at 54.12 in the middle of August. Do you remember all that rain and flooding in southwestern Ontario? We all thought that was going to do some damage. Doesn't look like it did much damage. A new record high on corn at 204. Did you guys know that? Did you guys have a perfect finish? No? 8, 9 guys I talked to say, Mo, it was perfect. It was the best harvest I've ever had in 50 years. Unlike the United States. Does anybody remember what I was saying last year when I was here? Anybody? I was joking around with you guys, yeah? I was bullish, yes. I was saying basically wait for the funds to cover that short position, which they did. The market did go higher, just didn't go high enough. But I was telling you guys, I was just joking with you, I was saying, what are the funds, those big ag fund speculators doing? They're chasing stocks, they're chasing AI, Bitcoin. Remember Bitcoin? And they were chasing this stock called NVIDIA. And I jokingly said, go sell your farm. Ag is just too hard anymore. Just retire and go invest in NVIDIA and you would have doubled your money. Did anybody do that? Tell me somebody did that. No? Come on. Darn it. Anyways.
They're on holidays because they did.
Sorry?
They're on holidays because they did.
Yes. So, this is what happened. I said wait for that because the funds were really short. They were short 400,000. And what have I always told you to do? When they're selling, do nothing. Be patient. When they're buying and they're getting greedy, sell into that. So see here, this was your low right in that February. It kept coming down. The March last year's show was right around here. And you know, the rally was maybe 55 cents. It wasn't much. But here's my little marketing cheat sheet that you guys need to learn, okay? See that red line? That's my moving average, that 200. I call it my mean or average. And over time, the funds will either get greedy or they're fearful. So as they buy, they gravitate back to that line. To get it above the line and get it into an overbought, overvalued situation, you need a catalyst. You need maybe strong fundamentals, maybe a drought of some sort, of weather scare. And when you do that, you sell it. We didn't get it. And unfortunately, the USDA was telling you there's a big crop coming. And I guarantee you, that crop in the US was a 185, 190 last August. I think the bean crop was a 55 plus. Maybe I got a little bit of that backyarditis because I was doing a crop tour in Ontario and we had some big yields. And then of course the USDA started to walk the yields back. And that's when the market started to go higher, okay? So, ending stocks on corn from last year's USDA Ag Outlook form went from 2.5 billion to 1.5. 10.3 stocks to use ratio. When you drop ending stocks by 1 billion bushels, the price of corn goes up. Same thing with beans. We were in the 500 plus million bushels on ending stocks. Then the USDA dropped that yield in January, and ending stocks fell to 380 and the price goes up. You had a USDA gift. I hope you guys know that. The January crop report was a gift, and it was a 1 in 20 year report. I'll probably never see it again because I won't be here for another 20 years. These are the funds. This is what they were long. They were short 353,000, and then they covered that short position almost by 700,000 contracts. As of right now, this is the last report. We'll get an update tomorrow. They're still long 337,000. My guess is because of the last 2 weeks and that volatility, that big panic selling, they're probably still long about 200,000. So if this trade war gets worse, the market feels that, we're not going to get much clarity and it lasts longer than we thought, then these guys will continue to sell. When in doubt, get out. And you can see here, canola also, that's record long. The canola has even better, stronger fundamentals than the corn does. Ending stocks are even tighter, and so that's why the funds have been chasing canola. But you still got to get past this trade war to go higher. And we're going to end up losing some acres this year because canola is like corn. It's very expensive to plant as you go into 25. And a lot of farmers, you need a lot of moisture in August to produce a big yield. They had a dry finish, so the yield was less than expected, but it requires a lot of high expensive inputs. So, the Western Canadian farmers probably switching more of those acres to wheat or cereals like oats. Sorry, and if you're a livestock producer, the funds are really long livestock because there's no supplies. The supply's down. Hogs are down 5.1% because of PRRS. Cattle, you know the story. They've been down for years now. The cycle, it's been dry, lack of pasture land, all that fun stuff. And so you're still in a bull market in cattle, but you got to get past this trade war because it can impact that demand. Here's a chart on the funds. They were short wheat. And you can see here at the end, they covered it, a little bit of that short position. Why? Because they were all worried about the winter kill and the wheat in the U.S. winter region and the Black Sea region. Do we kill wheat crops in February? Not that I know of. But it's noise. I call it noise. They needed to talk about something. You kill wheat crops on Good Friday, maybe a Mother's Day weekend when the weather, wheat's coming out of dormancy, you hit it with that cold ice. But you don't kill it when it's dormant in the middle of February. So, the other thought is, well, maybe if we end this war in Ukraine, Russia, it's bullish wheat. Okay, maybe Russia won't undercut the rest of the world with cheap Russia wheat, but what about if Russia's lying to you like China? Do you trust the Chinese data? Maybe they have a lot more in stockpile than they're telling us. Maybe they stole a lot of wheat from Ukraine. The other thought is the bear says, well, you end the war and you introduce more competition from Ukraine, more corn production, more wheat production. The problem with wheat is demand is very weak on a global basis because China's not buying. And you got too much in the United States. If you're a bull in the room and you think inflation's coming back, remember, everybody's worried that these tariffs are going to cause inflation, but inflation is usually caused by government spending too much wasteful money, all that cheap money. Remember COVID and all that money they were spending that they didn't have? That's what causes inflation. And now, Trump and Elon Musk with Doge, they're cutting waste galore. We should create a Doge Canada, and Kevin O'Reilly should run it for us up here because I guarantee you'll find a lot of waste. I'm trying not to get political with you, but if you believe that inflation's coming back, and this was 2020 to 22, there's a high correlation between high inflation or higher inflation and at commodities. Why? Because the funds will buy at commodities as a hedge against inflation. Any questions so far? You guys with me? So last year the funds were buying stocks galore. The last 2 years they've been doing really, really well. But the stocks have faded. The performance, that momentum to the upside has faded because the Trump trade has faded. Because they're worried about tariffs. They want clarity. This is the 10-year yield. You can see it was going up, now it's coming down. It was going up because it was telling the US Fed to stop lowering interest rates. They were worried about inflation, the economy, and growth and all that fun stuff. So do you guys understand what Trump's master plan is? I don't know if you've heard about it, but he's looking to abolish the IRS. He doesn't want consumers to pay income tax anymore. So what does he have to do? He has to replace it with something. He collects about $3 trillion in income tax. So he's thinking of providing all these tariffs around the globe, including Canada, collect some tariffs to replace that revenue. Well, he imports about $3 trillion worth of goods. The tariff on those goods would have to be at least 200% or more. And then the local price in the US would triple or quadruple. Now the consumer will have more money, but is he willing to pay triple the price? I don't think so. I think this plan would backfire on him. But that's his master plan. So when somebody says to me, hey Mo, is this trade war going to last long? I think it will because of that reason. He hasn't done it yet. He's floated the idea, but he hasn't done it yet. So that's my concern with this whole trade war. South America, there was a lot of noise between, Brazil being too wet, Argentina being too dry, but bottom line, it's a record crop. There's no weather risk premium for South America anymore. You're talking at least 18 and 20 million metric tons more than last year. That's going to continue to weigh on soybean prices. Global currencies matter, but the currencies are trading like this trade war is going to come to an end very quickly. This is the US dollar, so it's come down. Why? Because it's worried about growth. It's worried about there's a new indicator, I forget from where, suggesting that the US economy is going to fall into a recession because of all these tariffs. You're going to go from a 2.6% growth rate to minus 2.8. We'll see. I'm not in that camp, but this is the Brazilian real. So because the Brazilian real is at a 22-year low, it provides more margin for that Brazilian farmer. He's going to plant more corn acres. That means more corn production, which means a cap potentially over the coming months with that corn price. And there's your Canadian dollar. The Canadian dollar continues to give you a bonus, form of a higher basis. I don't understand why the Bank of Canada is not letting this thing slide to offset that 25% tariffs, because that's what the Chinese tend to do. And by the way, yesterday, China Z said, you want a trade war? I don't care what trade war it is or what war it is, I'm going to fight till the end. That's a problem for soybeans, guys. And they banned 3 companies, Louis Dreyfus, EGT, and I forget the other one. They banned them from shipping soybeans from the US to China. They found some ergot, some soybean shipments. They're just making it up as they go along. It's an excuse. But I think with China, it's personal. By the way, why are we fighting? We're a $2 trillion economy versus a $34 trillion economy. We're not going to win this fight. When Ford and Trudeau say $155 billion, 25% tariff on U.S. goods, it's not going to move the needle. I'm sorry, but it's just not. Just give him what he wants. It's 4 years. I know it's a long 4 years, but after that, we can fix it. Somebody else will be in. Same thing with Mexico. Whatever they do is going to hurt them more than it's going to hurt the United States. They don't want to get into a trade war. The EU combined 20 trillion, they can fight. They can drag their feet. China can drag their feet. This is diesel fuel. OPEC And crude, OPEC said they're finally going to increase crude production. Remember, they've been cut for the last 2 years. It really did not send crude much higher. I mean, it did for a brief moment, but they've lost a lot of market share to a lot of other producers like the United States. They want to gain that market share back. And your long-term channel support is 65, and guess what? We're at 66. And I've been using the Chalmers. This is where Chalmers and Shell come in. If you guys are not doing business with Chalmers, you need to pick up the phone and call them. Why? Because they use a Shell program. It's a 1-2 year forward booking program. I've been doing it since 2000, booking forward 2 years below $1 a liter. This is not available outside of this 2-hour radius, just north of London. The guys in Chatham don't have access to this. The guys out east don't. You guys have an advantage. Take advantage of it. So when you get your diesel price currently 109, if you continue to see this fall into the end of March and you get to $1, go book your diesel. Go book your diesel for 2 years below $1. Okay? For you to fall below 65, and it can, Trump wants it to go to $15. He wants inflation to go to 0. Drill, baby, drill. But that takes a long time. And you'd have to get another black swan like COVID where you shut things down to cause crude to come down like that. He's not going to be able to do it. He doesn't like OPEC. He's constantly telling them to increase production. But I don't think OPEC likes Trump either. Fertilizer. Zach just talked about fertilizer. We've been booking for a long time. See that? Price is going higher. You're going to add 5-6 million acres to corn this year. That's an increase in demand. Your spring price is not going down. And like Zach said, make sure you have it purchased, paid for, and delivered, because they can use force majeure on you in a trade war with tariffs. And they'll add that tariff onto your bill. And you do not want that. So make sure you eliminate this risk. The global balance sheet's too tight. China's not shipping as much around the world. We still have those U.S. countervailing duties on Morocco, Russia, and that's why the balance sheet remains tight. Soybean exports, we're up 14%. It's average at best in the U.S., 6th best in 10 years. But China just retaliated on U.S. soybeans. So I don't really care about the trade war with Canada again. Whatever's going to happen is going to happen. It's too small to matter. We do buy a lot of ethanol from the U.S. We ship 90% of the potash to the U.S. So the U.S. farmer could be impacted on potash. But other than, and we do ship some cattle and pigs, but it's not going to impact your corn, beans, wheat. Mexico buys 40% of U.S. corn and 40% of pork. So a trade war with Mexico is more important than a trade war with Canada. And then, of course, with China, the 3 largest trading partners. Everybody said, well, Mo, even if China doesn't buy beans, somebody else will. No, there's no other country that can buy their volume. And this is what your risk is. China makes up 20% of the 1.825 billion bushels that the USDA currently is forecasting for 2024-25. That's an amount of 365 million. If they just start buying from Brazil. And our ending stocks are at 380 right now. We got a March crop report coming out next week, next Wednesday. You think the USDA is going to change this ending stocks number? No. They're going to kick the can down the road because of tariffs. But if all of a sudden China stops buying and you see that pace start to come down, and we had an export daily report, weekly report today, we're still 13% ahead of last year. But if that starts to tail off, and if you go back to 2018, that's what happened. I'm going to give away my first coffee card. What was the low on beans in 2018? Does anybody know? Give me a number. I want to know if you guys are watching this thing that closely.
680 US.
680 US, too low. Keep going. Give me another number. What'd you say? That's still too low. What'd you say? 890? Too high. Give me another one. 860, still too high. Who said $8? 812. That's your risk, guys. I'm going to be honest with you. Now, you just had a rally. Remember I said the USDA was a gift in January? And they lowered the ending stocks, not as much as on corn, but beans rallied back to 1070. You had a lower dollar because of trade war risk. And you had a flat price of 14 to 14.50 for both 24 and 25. Did you sell that? That probably is your high for the year. China can buy from Brazil because Brazil's cheaper. It's been as much as $1.10, but it's about 50 cents to 84 cents cheaper. That Brazilian real can help that. The USDA is saying 94 million acres of corn this year. I think that's too low. Economics point to even more acres of corn. The core of the Midwest is Iowa, Illinois, Indiana. Anything around it is called the fringe states. When you add all those acres in those fringe states, you attract marginal acres. So the chance of you achieving a 181, 183 yield is very difficult. That's why you guys tend to outperform them, because we're a smaller area. So that's your risk on corn. You start to add 5, 6, 7 million acres. You think the price is going up? Why? Because ending stocks start to go back up. So here's your balance sheet on soybeans. And there's a lot of numbers on here, but just focus on this. And I'm giving you sort of a worst case scenario. I'm trying to make you think of what is your risk. Why am I not pulling the trigger right now, Mo? I'm adding acres down to, I'm subtracting acres down to 83.5. USDA is saying 84. I'm saying the yield's 55. One of these days they're going to have to achieve a record crop. And then I'm dropping ending stocks dramatically because of this trade war, because China just said, you want to fight? Let's fight. Ending stocks balloon to 700. You think we're going back to $8? We could. And I know the trade and the funds think that we're on the verge of signing a phase 1 trade deal with China. Do you know how long it took the last one? It took 33 meetings, hundreds of hours, and 18 months to do it. I don't think China's in the mood to sign a phase 1 trade deal right now. Maybe I could be wrong, but that's your risk. Okay? Ending stocks on beans globally, almost record high. And you're going to add to that with a South American crop, maybe potentially with a US crop, and that's going to continue to weigh on soybeans. Corn, the pace has been really strong. The corn export pace up 28%. But if you get into a trade war with Mexico, that could go away. That's why corn dived, because of this. They're worried about this. And that number has dropped to 26% as of today. So the number's slowly starting to come down. Okay, Mexico is the big buyer best since 2021. That's when the US signed that phase 1 trade deal with China. Corn balance sheet, focus on this column. Ending stocks go back up to 2 to 2.3, depending on what number you use in here. I'm using a higher corn acreage number. I'm using a yield at 185. That's going to be difficult. You're going to need perfect conditions. And I don't really change demand a lot, but I'm changing it a little bit. With that big of a crop, demand's probably going to go up, but you're at risk because of this trade war. That corn demand with Mexico, if they decide to fight, could hurt you. Mexico could buy that corn from Brazil, but when you put it on a boat, the freight cost just goes through the roof. I guess my time's up. I lost the game. So here's your corn. That was weird. So January was 10th. This is your USDA report. There's the rally. Funds added to their long position. And we peaked right here. And then all of a sudden you get the panic selling, the dive. Remember what I said earlier? But my 200-day moving average, where is it? It's right there. See how the funds were buying and they were well above that 200? That's your selling opportunity. And you're going to say to me, well, it's going to go higher, Mo. Well, maybe. And they tend to overdo it when they get to an extreme greedy position. But it peaked because of the trade war, and then all of a sudden, when everybody wants to go out that same door, it gets ugly. So what do you do now? Don't panic, sell. It's too late. If you missed an opportunity, it's too late. You're going to have to, honestly, what's going to help you is maybe a weather scare. And we'll get into the weather in a second. But that's about the only thing left. Unless you can tell me that Trump's going to sign a trade deal with Canada, Mexico, China anytime soon, I don't think so because of his grand master plan. This is soybean meal, so we're in a bear market. It's near the long-term channel support, so the livestock producer in the room, this is a great buying opportunity for meal. I think it can go lower, so you could give it a couple more months. Soy oil, also in a bear market. Everybody's talking about 45Z biofuels, sustainable aviation fuel. They need another demand source like ethanol and corn, because if they don't find it, and we can't rely on China because of trade wars, what are we going to do with all these beans? And when Trump spoke to Congress the other day, he goes, farmers, you're going to start selling a lot of your crops domestically. And you're going to have fun doing it. Really? He doesn't understand anything about ag. They produce too much. Who are they going to sell it to? Honestly, that's why we have ethanol. That's why we export corn. That's why we export soybeans. So the 45Z is critical, but I don't think, and there's a lot of companies divesting themselves out of this because they're tired of waiting. And I don't think the Trump administration is going to give them that clarity. So this is also bearish for soybeans. This is soybeans. You can see there, we touched that's the 100-day. There's your 200. So the 100 act as a ceiling, and now you're falling back again. So if this gets into a really extreme situation, don't panic, sell. Remember, even in 2018, we fell to 812 for a brief moment, then it came back. Okay, but are you going to be able to survive this? You got bills to pay, all that fun stuff, right? Canola, as I said earlier, very strong fundamentals, even better than corn, tries to rally, and I think we can go to 700, but you got to get past this trade war. Remember, there's a lot of canola oil meal that gets shipped from Western Canada down into the United States. And then this is wheat. Here's that rally on winter wheat kill damage. Touched the 200, fell right back down. Actually traded to new lows. It's bouncing because Trump is providing some of these exemptions the last few days. But again, I don't think that's going to work. The stock market is not happy today, even though we got these exemptions. So what happens after a month? Remember, he's got reciprocal tariffs because the trade deficit's coming April 2nd. And he's saying that come April 2nd, we're back to square one. I could see April 2nd come, and we got 50% tariffs on Canada. That's what I see happening. And yesterday, Trump said, and we're going to give autos a 1-month exemption. What did Ford and Trudeau say? Unless you eliminate all of them, we're sticking to our plan. 25% on 155 billion, period. Live cattle in a bull market. Again, it's corrected a little bit because the funds are too long. And when in doubt, they want out. But by the end of the year, I think you'll see new record highs. Same thing with the feeder cattle. If you do start a trade war with Mexico, you'll get less cattle coming across the border, and that means tighter supplies again, which means higher prices. Basis corn is up about 23 cents since last August when the dollar was higher. Soybean basis up about 30 cents. Wheat basis up about 35 cents. There's your soybeans. versus 2016. We're starting the trade war a lot quicker, a lot sooner. China's retaliating a lot quicker. China did not retaliate till July of 2018, and that's when soybeans dove. I think we're going to do it a lot sooner. It's dry in the United States. This chart's showing you how dry it is in Iowa versus 133 years. You guys think we're going to have a drought this year? Farmers in the U.S. are complaining, oh, it's dry. You got farmers planting beans right now in Illinois. That's how dry it is. I think it's a little early because it's a little cold, but hey. This is a long shot. So if you're waiting for 2012 and much higher prices, it's a long shot. They're talking Enzo, slight weak La Nina, but nobody's come out with their forecast for the summer. I've never known a meteorologist that has predicted a drought ever, and they're not going to start. Wait, let me go back to that. So you guys have heard me talk about the 89-year drought cycle before. I've been talking about it since 2019, and everybody's talking about it. But in order for you to get that 89-year drought cycle, a couple things have to happen. You got to wait till April, May, see what Mother Nature brings. If it's very wet, forget about it. It's not going to happen. In 1936, the winter of 35, we had extreme cold temperatures like some regions in North America, and we had a ton of snow, just record amounts of snow. Like some areas, like Bruce County, I think they got, 10, 12 foot of snow this year, something like that, 300, 400 millimeters. But as you got into May, it turned hot and dry. When I say hot, you need temperatures above 100 degrees. In 1936, you had 36 days above 100 degrees. Do you know that in the state of Iowa, in the last 25 years, you've only had one day above 100? I know you say to me, Mo, that's impossible. That's according to NOAA, okay? So you need extreme temperatures. I think these genetics are better at dry conditions, but not necessarily extreme high temperatures. Do you remember 2012? When did the funds really start to worry about that drought? Give me a day. What was the day? Anybody? Sorry? June 1st. July what? July 12th. 20th. Anybody else? Who said the 1st? He's a client of mine. He cheated.
Yeah, I never heard from you before.
I'm just joking. It was July 1st. In fact, corn went from about 6, can't remember the exact price, but I think it was relatively high, and it came down. It was just falling ever so slightly. Got to about $6 on July 1st, and that's when they hit the panic button. And we went to $8.49 within a month and a half, and it was game over. Remember, the USDA has to tell you this story, the gospel truth. Because if they don't, nobody knows what's going on. Now, it doesn't matter. It doesn't matter what Mo's saying. And you get the short crop, long tail. And what do you do when it's at $8.49? You sell it. What else do? You sell 2 years in advance. And I know you guys hate doing that. Well, Mo, I don't know what I'm going to plant. And who knows what weather's going to be. Take the risk. Trust me. It'll pay off for you. Don't forget to fill out those forms. I'm giving away free subscriptions, so thanks for coming. We're almost done. There's the form there for the tour. I'm introducing a high-yield corn contest for the tour called Colonel King. Come and see me at the booth later if you want to participate. There's the March Planning Intentions Report, and I'm starting a free podcast March 28th called the Ag Commodity Corner Plus. I don't have a QR code for you guys to take a picture of, but you can like it. Once you subscribe, it's free. It'll notify you when the new podcast comes up. So it's going to be a free weekly one. Eventually, if it becomes very popular, I'll do a daily, but that's I'm starting to venture into those digital apps because they become very, very popular. This was my last presentation, but Randy was not able to make it, so we'll skip through it. Does anybody have any final questions for me?
Was there not an old saying, when you're planting your crop, that's the time to sell that crop too? Is that, there's statistics behind that?
Yeah, the question is, when you start planting your crop, it's time to sell that crop. If you go back, give me 1 second, I'm just going to go back to one of my charts just to explain it to you. And that's more of a seasonal thing, right? Where the price starts to come up because of weather. But this is an unprecedented year because of Trump and trade. So it's I don't know if the seasonals will work necessarily.
Well, history says it's something like 7 out of 10 times that.
Yep. But the high is typically June, July, or August.
Those are your 2012s and 2008.
Right. Well, so August is a 2012. That's very rare. Last year, the high was May. So when you get to May, what are you going to do? You going to wait for June? Because it's going to go higher? I would manage some risk and take some off in May. But here's my problem. Oh, there we go. So see that this is the May contract. I don't have the December contract up here, but let's just talk May. So this is your high, and this is your, well, I guess this will be the low because it was low here. So my problem is that I don't know if we can get back above that because you've done so much damage on the chart. It's almost impossible to get back above. My target was 575, but that was without a trade war. And I still need that corn demand to remain high. In the last 55 years, you typically don't hit lows in April and March. Okay, so remember that. You don't hit lows in April and March. But you got this Trump trade war. So it's going to be difficult not to hit lows. You could, okay? And then again, seasonally with the weather scare, you can get highs in May, June, July, or August. August is very rare. It happens more often than June and July. So you get to June, the old saying is July 1st, right? Corn's head high. When you get to July 1st, and you haven't sold the darn thing, you got to ask yourself why. Because it could be over very, very quickly, okay? So, yes, sir.
With South America coming on stream, are the seasonalities going to change?
With South America coming on stream, the question is, with South America coming on stream, will the seasonals change? No. So the market was a little concerned about the second Safrinha corn crop. If you remember, the bean crop in South America was planted 2 to 3 weeks delayed because it was too wet. Too dry. And they were waiting for rain. And so then the harvest was 2 to 3 weeks behind, but that's kind of normal. And everybody was worried that maybe 30-40% of that second Safrinha corn crop that makes up a big chunk of the production, 75%, was going to be planted in the less than ideal window more during the summer months when it's hot and dry. But they caught up. They caught up to the 5-year average. So that second Safrinha corn crop's a little bit dry, but at this point, there's no weather scare in the markets for that. It's more about trade at this point. So, no, I don't think it's going to change much. And then eventually, we'll start, once we get past March 31st, we know what the U.S. acres are, then we'll start to trade the U.S. weather scare. Any other questions? Yes, sir.
Soybeans highs usually in July.
He says the soybean highs sometimes are in July, correct?
Oh, they said all the time.
All the time? It could be. I'd have to go back and look at the charts, but yeah, it tends to happen a lot in July. Any other questions?
So what should our plan be for 2025?
For your plan, so what's your plan for 25? So You had the opportunity to sell the flat $6.50. If you didn't sell it, you missed it. Don't panic sell. I did have a chart, sorry. So my summary is don't panic sell. If you miss the opportunity, wait. Okay? You'll survive this, everybody will. Book your fertilizer if you haven't done that. That's your first homework. And then make sure you book that diesel fuel. Go call Chalmers Fuel. If I'm booking a lower input and then selling corn higher at a later date, I'm having my cake and eat it too. Remember, with the drought, I'm going to leave this with, well, two things. It takes 3 months to get dry. It takes 30 minutes to get wet. Celebrate the wins. So you had a USDA gift. Celebrate the wins, protect the gains.